Morning, everyone. Welcome to this morning's edition of the MPC Markets Morning Call, 16th of April 2026. Stocks hit fresh records as investors returned to the tech sector overnight. I might just skip through just a little bit and just address this here. As you can see, there's a big rotation back into these mega caps. Overall, Tesla had a small announcement on some success with their fabrication with AI chips. But these guys just generally really lifting the market. And as you can see, because these squares are relative to the market cap, for these small companies, for these small amount of companies, that concentration risk to be up, it dragged it up to fresh record highs. So above 7,000 for the first time in the S&P overnight, new records for the NASDAQ, et cetera, et cetera. But as you can see, we actually had in the S&P 500 overnight, there were actually more decliners than there were advances. So yeah, very sort of concentrated. I kind of get it. Like we're looking at a situation at the moment where there are a lot of risks out there, and this sort of shift back, I don't necessarily see as a bullish signal. I see it probably more as a shift to safety overall, because I would say these massive companies that sit in this region here, and Tesla to an extent, I mean, given, depends on whether you're a Tesla fan or not. I am, but some people aren't. These guys are holding the market up, and they're very cashed up. They've got very solid businesses, huge free cash flow. They're in my mind, they're a safer bet than the US government is. Like they're almost beyond the most stable governments in the world in terms of fiscally, and if you're looking for general safe havens, they're probably some of the best bet out there in the market, because there was news last night that the latest figures have sort of come out. The last 5 months, the Trump administration particularly has we've seen the debt grow at the quickest rate in a 5-month period in history ever. So and then Trump's turned around and asked for not just an extra. So we've got $1 trillion US defense budget. They outspend then the next 10 rivals combined by double. And he's gone and asked for a further. The initial ask was for $200 billion. The fellow who controls the purse strings in that, for the Department of War, basically said he could, nearly almost not spend it. It's that much money. But then Trump's then gone and asked for $500 billion. So, we're talking about a 50% uplift, which, I mean, if you put that on a global perspective, it's just mind-boggling. So we've had troop escalations in the last week. We're sitting at a 5 out of 5 escalation on the escalation scale. A further 10,000 troops going. Oil prices have remained exactly where they are. Iran shutting off the plastics. We've seen, any form of anything related to plastics, etc. The cost of the consumers just continues to go through the roof. We're looking at, if we go back to normal 45 days, it's going to cost the US consumer $25 billion. And like a 50 basis point rate hike is less than that on total consumer debt. So, I mean, this is going to slow the economy. We did have a small spike in traffic, but no more than 20. Trump has now announced that his blockade is over. And hence the picture on the front here. Basically, Trump's making announcements. He's negotiating with himself and saying that it's the Iranians. He's not negotiating with anyone. And then he's getting him and his administration to go, yeah, we agree. And yeah, the equity market's just eating it up. Whilst I don't necessarily disagree with this shift here, back to out of that broadening and that cyclicals back into that concentration there with those more solid companies. Where we are in the scheme of things is just beyond mind-boggling, to be honest. Yeah, we had Morgan Stanley rally overnight. All the major investment banks, killing it on fees in the equity market, etc. We'll see Blackstone tomorrow night. They've got a lot of private equity, private credit issues going on, so they might be the exception to the rule. But look, who knows? They got ahead of it. Netflix will be tomorrow morning as well. But yeah, and we've got unemployment today in Australia. So huge news in Australia. We've had a massive fire in one of our two refineries for petroleum and aviation gas, etc. That's 10% of Australia's supply, which is an absolute disaster. So I had a look into this. I put on my tinfoil hat and was just like, because we've had multiple in Texas. We've had multiple around, Europe and things. Just going like, is it possible that these things are on purpose? And look, basically, it was a nice level and reasonable response, and a fairly logical reason. So whilst it's not out of the realm of possibility that these are being sabotaged, the likelihood is that they've been, that they're basically, because oil prices are so high, they are just running them at absolute breakneck capacity, and there's generally issues. But there are a couple of things that don't add up with quite a few of these, things, particularly the Australian one. We've got a friend in the industry and said that who deals globally in Middle East, US, etc. in that oil industry, who will remain unnamed. He said Australia, basically those two refining plants, who he would deal with, they basically struck them as clients. They said they were too hard to deal with. The regulation was too high. So he's when the safety and regulation gets to the point where suppliers for maintenance equipment won't even deal with you because it's out of control, then how the hell did this thing happen? But look, I mean, this equity market here at the moment, it doesn't make a lot of sense. And particularly when you've got US debt spiraling, you've got private credit issues, you've got this war the war's escalating. No matter what Trump says, the war is escalating. Him just saying that we're coming to a peace deal, and then almost putting a sock puppet on his hand and replying like, yeah, we are, is sort of getting beyond ridiculous. But what's more ridiculous is investors and the financial press's capacity to believe it. When oil prices and bond yields are definitely not taking it on board, but stocks are. So overall, definitely be looking at trying to trim positions into this strength, because this will at some stage return to reality, I would imagine. There's a similar situation in 2022 where we busted back up above the 200-day moving average in the US indices. It looked like it was going to be all over in the Russia-Ukraine thing, and then the inflation started to filter through in the preceding months, and the market got whacked down. I think the peak low was down 22%. So we had to recover from there. But we're as you can see, crude's not really down. We're down about 7 for the week or whatever. Gold was down initially. It started to make a bit of a recovery here. There wasn't much movement overall, except for, say, uranium. And iron ore made a bit of a bounce, but there wasn't much movement overall. So I've done, and this was a bit of an experiment. I'll probably have a better dashboard coming up. But we've got that private credit default rate hitting that 9.2. We've got like 9.2%. It's one of the highest sort of periods or highest rates. They may have gotten ahead of it a little bit in terms of, you can see here the redemption requests versus the 5% quarterly caps. So you can see many of these double the requests are at minimum double, if not, oh God, I mean, look at Blue Owl. Looks that certainly looks really really horrible. But we've got you've got JP Morgan Chase at 58 billion. You've got Wells Fargo at 36, Citigroup at 22, Bank of America 35, They're direct and confirmed private credit exposures. If you really want to stack up, how they're related, it edges up towards about with total NDFI, undrawn committed lines of credit and unfunded, FDIC totals drawn, it's 350 billion exposure, but undrawn credit lines brings it out to closer to 900 billion. So that's just sneaking along in the background as well, and you just want to be a little bit careful. So we've also got the at the moment, for those of you who've watch every day or seen Ausbiz or whatever in the last couple of days, we're really stressing being patient. We've got a strategy that's coming up called Buy the Dip. So basically, if you can buy towards the lows in that period between the middle of May to the middle of October, particularly in a midterm election cycle, the average 1 year returns after the lows is around about that 36% mark. So we've basically put an index structured investment together, and you essentially, your observation period for the first 6 months, you get the lowest settlement price on a weekly basis on a Thursday for that first 6 month period. So hindsight 2020, and then that is your entry price, and then it's a 3 year index investment. So I'm sure a lot of you have got index investments out there, and I think this is it's a really difficult thing to try and buy the dip because it always seems at the time so much worse than it actually is. And then you've also this product involves, because it's got options and call options in it, is about 6 times leverage as well to the upside. So you can really make the most of these dips, because I think Trump does everything he can to prop up the stock market. That's where we're sitting. That's why we are where we are right now. He's just got this constant trickle feed of positive news. There were stats from House of Reps inquiry that Trump-related businesses, directly linked to lobbyists, have made an extra $5.5 billion last year. In the last year, since he's been in power. He's very geared to enriching himself, his friends, and his family. So that Trump put, he'll want that market up. He'll do anything he can to do it. But we've got current overvaluation alerts here. The Schiller, the cyclically adjusted PEs is nearly double the over threshold value, not just double the normal levels. Trailing PE, super overvalued. Forward PE is not bad, but it's still above the threshold. Buffett indicator, well into the overvalued. So look, when you've got, and there's a couple of others as well that I just left off there, but there's at least one 10% correction, greater than 70% of the time, when you see 7 of these 7 valuation alerts flash at once. We've only had an 8% correction, and then your midterm election cycles, you get on average about a 17. So, I think this is, you've got to be patient. So, but, buy the dip. I didn't really think about that then. You can scan that QR code or go to the website there. I tried it. There you go. You can scan the QR code, go to the website. There's a full explainer on YouTube. But that is just, that's the easiest option at the moment, is just take advantage of this, be patient, and try to get into that index over the coming sort of 6 months, because this is blind optimism, and is probably an understatement to describe where we are at the moment. You can really, you probably really benefit setting yourself up for the next 2 or 3 years for the rest of his term by getting involved in that. So, look, if you want help as well in terms of what you want to sell, if you wanted to buy into this, obviously you can scan this QR code as well. We'll run your portfolio review. We can have a bit of a chat about it, and you see how we can help it fit in your portfolio. The feedback's been pretty good on these. You can, I know there's 2 QR codes there, but you can find them on the homepage on our website, mpcmarkets.com.au. Look, again, the SPI was around about flat. I think this refinery fire is going to really affect the sentiment in the Australian market today. It's going to be all eyes on the US, And I mean, there is so much good news baked in here at the moment that the risk reward is certainly to the downside, but it can drift along quite nicely over the course of earnings season. So I wouldn't recommend necessarily being short, but I think de-risking is probably a smart idea, and pulling together your plan. Anyway, people, have a great day, and we will speak again tomorrow.
Feeling lost with investing? Meet Mosaic. Mosaic is MPC Markets' platform that turns confusing markets into clear, actionable guidance for your portfolio. Discover Mosaic today. Portfolio and trade ideas in one place for clients and subscribers, powered by MPC Markets.